Picture this. You sit down at your desk, the chart's open, and you're laser-focused. The setup looks clean. You take a deep breath, remind yourself of your rules, and execute perfectly. Stop loss in place. No revenge trades, no hesitation, it feels good, like you've finally cracked the code of discipline. But fast forward 3 months. You've had plenty of trades where you stuck to the rules just like that first one. Yet your account balance doesn't reflect it. In fact, it looks messy. Up, down, sideways with no real progress. Suddenly, you're left asking yourself, wait a second, I've been disciplined. So why does it still feel like I'm going nowhere? This is where most traders get trapped. We confuse microdiscipline, the ability to follow the rules trade by trade, with macrodiscipline, the ability to stay consistent over an entire journey, 6 months, a year, or longer. Microdiscipline is like brushing your teeth. It's good for you, but if you never go for checkups, watch your diet, or floss, the long-term health of your teeth still collapses. Macrodiscipline is the bigger picture, the habits, reviews, and consistency that make all the little efforts actually count. So the real question is this: is discipline about nailing one trade at a time, or is it about how your behavior stacks up over hundreds of trades across months? And here's the twist. It's not an either/or. One without the other is like building a wall with perfect bricks but forgetting the cement, or laying out cement with no bricks to hold it together. You need both the micro and the macro if you want your account to tell a different story 6 months from now. So what exactly is microdiscipline? It's the kind of discipline that lives inside a single trade. The split-second decisions. The ability to stick to your rules when the candles start moving against you. When greed whispers in your ear to double your size. Or when fear tells you to close early. Think of it like the muscle memory of trading. You've got your plan, entry criteria, risk percentage, stop-loss placement, and profit targets. Microdiscipline is following through on that plan without flinching. Examples? You see the setup, it fits your system, you wait for confirmation instead of jumping in early. You take the loss gracefully when your stop gets hit, instead of moving it just a little lower. You don't chase a green candle just because you're bored and want action. This is where most traders start, and honestly, it's the first battlefield. Microdiscipline is about controlling yourself in the moment. Without it, you don't even survive a week in the market. And the benefits are clear. You reduce emotional mistakes. You build confidence in your strategy. You stop turning one bad trade into a catastrophic day. But here's the catch. Microdiscipline is only about today. It's trade by trade, moment by moment. You can be flawless on 10 trades this week, and still wreck your account by next month if you don't connect those small decisions to a bigger framework. It's like dieting for a single day. You can say no to the cake today, that's microdiscipline. But if you binge 3 pizzas every weekend, what did that one small victory really do? Microdiscipline is necessary, but it's not sufficient. It's the brush stroke, not the full painting. If microdiscipline is about winning the battle, macrodiscipline is about winning the war. It's not about how you handled one trade, or even a single week. It's about how you managed yourself, your strategy, and your account over the course of months. Where micro lives in the moment, macro lives in the timeline. Macrodiscipline looks like this: risking 1 to 2% per trade and sticking to it for 6 straight months, no matter how tempting it is to go big after a hot streak. Keeping a trading journal, reviewing it weekly, and actually learning from the patterns, rather than ignoring your mistakes and hoping the market forgets them. Following one tested system long enough to see whether it truly works, instead of hopping from one strategy to another every 2 weeks. Taking breaks when your plan tells you to. Even if your ego is screaming, don't miss out. Macrodiscipline is about patience and consistency. It's the discipline to not just survive the next trade, but to still have an account worth trading after 6 months. Here's the hard truth. Many traders have enough microdiscipline to take one good trade, but they don't have the macrodiscipline to stay consistent across a whole quarter. They stick to rules for a day but abandon them for a month. That's why their account looks like a zigzag roller coaster instead of a steady curve. Think of it like fitness again. Microdiscipline is showing up to today's workout. Macrodiscipline is committing to a 6-month training program, tracking your diet, your sleep, and your progress. One push-up doesn't change your body. One clean trade doesn't change your account. But doing the right thing consistently over a long enough timeline, that's where transformation happens. Macro discipline is the glue that turns dozens of good decisions into something meaningful. Without it, your disciplined trades are just isolated wins floating in chaos. Here's the irony. You can be perfectly disciplined in one moment and still lose the war. This happens when traders obsess over microdiscipline so much that they forget the larger context. They say to themselves, I used a stop loss today. I'm disciplined. I didn't revenge trade this session. I'm on the right track. And yes, that's a win in the short term. But fast forward a few months, and you see the hidden cracks. They take too many trades in a week, even though each one follows their rules. They increase position size after a winning streak, telling themselves it's calculated risk. They switch from system to system, chasing greener pastures, while proudly saying, at least I follow my entry rules. They stop journaling after month 2 because it feels boring, yet they keep calling themselves disciplined. It's like polishing one brick to perfection while the entire house is crumbling. The truth is, microdiscipline without macrodiscipline just creates controlled chaos. You're playing by the rules in the moment but sabotaging your account over time. Think of a student who studies diligently for every quiz but never shows up for midterms or finals. Yes, they're disciplined on quiz day. But when the report card comes, the grades don't lie. The market works the same way. You can be proud of your single trade discipline, but if you don't connect those trades to a bigger framework, risk management, system consistency, long-term planning, your account ends up looking messy no matter how disciplined you felt in the moment. And here's the painful part. This trap feels comfortable. You feel good because you're technically following the rules. But 6 months later, you realize all you've done is mastered the art of running in circles. If over-focusing on micro is like polishing one brick while the house crumbles, then ignoring micro is like having a blueprint for a mansion but laying crooked bricks every single day. This is the trader who has the perfect long-term vision. They've mapped out a 6-month plan. They've calculated their risk per trade. They've built spreadsheets, color-coded charts, even a vision board with their future profitable self. But when it comes to a single trade, discipline slips through their fingers. They'll tell themselves, it's just one trade. Bending the rules won't hurt. I'll journal this weekend. Let me skip today. Yes, my stop is set, but maybe I'll move it a little lower just this time. And just like that, one moment of emotional weakness can erase weeks or months of careful planning. Here's the brutal reality. Macrodiscipline collapses without micro. You can plan for 6 months, but all it takes is a single oversized, impulsive trade to blow up that plan. It's like saving diligently for a year and then blowing it all in one reckless night out. Or being on a perfect diet for months, then deciding a cheat day means eating 10,000 calories in one sitting. The months of effort don't balance out the one huge mistake. This trap usually happens to traders who love thinking big, but hate the grind of daily discipline. They enjoy setting visions, strategies, and long-term goals, but when the heat of the market hits, they treat the rules as optional. The result? A blown account and a bitter lesson. You can't outsource the future to your plans if you sabotage the present with your actions. Here's the truth. Micro and macro disciplines are not rivals. They're teammates. One without the other is like having lungs without a heart, or a car with an engine but no wheels. You won't get far. Think of it this way. Microdiscipline is the brush stroke, the small, precise actions you take trade by trade. Macrodiscipline is the painting, the bigger picture those brush strokes create over time. A trader who only focuses on micro ends up with scattered dots, perfect in the moment but disconnected overall. A trader who only focuses on macro ends up with a vision board and no execution, grand plans but messy details. When they work together, something powerful happens. Micro keeps you from self-sabotaging in the moment. Macro ensures those moments compound into meaningful progress. Here's a simple analogy: fitness. Micro equals eating clean today, doing the workout, going to bed on time. Macro equals sticking to the 6-month program, reviewing your progress monthly, adjusting when needed. One without the other doesn't transform you. Both together build the change you want. In trading, that means micro, respecting your stop loss today, not chasing a setup, following your entry checklist. Macro. Risking 1% every trade for 6 months straight, journaling every session, resisting the urge to switch systems when you hit a drawdown. Together, they protect you from the two biggest dangers: blowing up your account in a single impulsive moment, drifting sideways for months with no real growth. It's not glamorous, it's consistency. And consistency is where traders cross the line from hobbyist to professional. Because here's the secret. Trading success isn't built on one perfect trade. It's built on thousands of disciplined ones, stacked together, pointing in the same direction. So how do you actually balance micro and macro discipline? It's not about choosing one, it's about building systems that cover both. Step 1. Build a microdiscipline checklist. Before every trade, run through a short no-excuse list. Examples. Does this setup match my trading plan? Yes or no? Is my risk size correct? 1 to 2% max? Is my stop loss set before I hit enter? Am I emotionally stable right now? Or trading out of boredom, FOMO, or revenge? A checklist forces discipline in the moment. No checklist equals relying on emotions. Step 2. Install accountability for macro discipline. Micro rules handle today, but macro discipline lives in routines that stretch across months. Examples. Journal every single trade, even the embarrassing ones. Weekly review. Did I follow my system? Did I break rules? Monthly review. What's my win rate, risk-reward ratio, drawdown, and overall curve? System commitment. Stick to one strategy for at least 6 months before judging results. If you're not reviewing, you're just trading blind. Step 3. Risk consistency. Both micro and macro depend on risk discipline. Never break your risk per trade rule. Not today. Not tomorrow. Understand that one oversized trade can undo 6 months of discipline. Consistency in risk is the backbone of macro growth. Step 4. Pre-commit to limits. Daily limit. After X trades or Y losses, shut it down. Weekly limit. Cap the number of trades per week so you don't overtrade. Time off rule. If emotions run high, step away. Discipline sometimes means doing nothing. Step 5. Treat trading like a business. Businesses don't evaluate success on one sale. They track quarters, cash flow, and long-term growth. Your trading account is no different. Micro equals the sales interaction. Macro equals the business health. If you want to be a professional trader, you must manage both levels like a CEO. Step 6. Anchor yourself. Create visual or mental reminders. A sticky note on your screen. One trade doesn't define me. A calendar reminder. Review your journal. Big picture matters. A mantra. Micro keeps me sharp. Macro keeps me alive. Discipline grows when it's constantly reinforced. Balancing micro and macro disciplines isn't about being perfect. It's about building systems that keep you from falling into the two extremes. Winning a battle but losing the war, or dreaming of the war but blowing the battle. At the end of the day, trading discipline isn't just about surviving one chart, one candle, or one trade. It's about writing a story with your account over months and years. Microdiscipline is what keeps you from self-sabotaging today. Macrodiscipline is what ensures all those clean trades stack up into something meaningful tomorrow. Think of it this way. Microdiscipline is your shield. It blocks the little daggers that can wound you in the moment. Macrodiscipline is your armor. It protects you across the whole campaign. Without micro, you won't last a week. Without macro, you won't last 6 months. Together, they transform scattered moments of good behavior into a consistent trading identity. And that's the real secret. Discipline isn't a one-time decision. It's thousands of small decisions, lined up in the same direction, repeated over and over. So the next time you feel proud of following your rules in one trade, great. Celebrate it. But don't stop there. Zoom out. Ask yourself, am I building a story of discipline over the next 6 months? Or am I just surviving the next 6 minutes? Because winning in trading isn't about being disciplined once. It's about being disciplined long enough for the market to reward you. One trade shows discipline. 6 months show who you really are.